Sir, who has to file income tax returns? How to pay income tax and how to file, sir?
This is a basic question.
Yes, sir.
Many people doesn't know that. The reason is every person who earns an income of more than 2,50,000 per annum, he has to file his income tax return.
How to pay income tax?
Every income tax has to be paid through digital challan, digital payment. It is not through, means you have to go to the bank through a challan, or you have to pay the digital pay transfers also. So it is now it is not allowed to pay cash or check. You have to pay only through challans.
Okay.
Challan will come transfer from account or from debit card, or in any mode you can pay the taxes.
Okay. How to file the income tax returns?
Yes. After getting, during the income tax is computed for the income earned during the previous year. What is previous year? This year is 18-19, for April 18 to March 2019. So what is the previous year is 17 and 18.
Yes.
April 17 to March 18. So this is the previous year. This is called previous year and income tax. So whatever your person earns during the year, April 17 to March 18, has to calculate what is his earning and what is the after expenditure, what is expenditure, what is the net amount he has earned. And on that he has to pay, he has to file the details. Generally, one person may not be having only one source. He may be having different sources of income. Maybe salary, bank interest, rental property. All this should be put together, and if it crosses more than 2.5 lakhs, he has to file his return of income.
For whose income the taxpayers has to file the income tax returns?
Generally, it happens suppose in a family is there. Income tax is taxable on individual basis. It is not family basis. It is only individual basis. If a husband and wife both are employees, each has to file separate income. Each are eligible for 2.5 lakhs benefit. Suppose there are 4 members in a family. 4 are earning. 4 are eligible for 2.5 lakhs. Even though they are living together combined in one family, they are eligible, each eligible for 2.5 lakhs benefit. Okay. So he has to file for his income and on his source of income only. And wife, suppose other person is there, wife, spouse is there, she also has to file her income only. It need not, both income will not be clubbed together.
Yes, sir.
It will be separate. It will be separate. All will be separately. All will be to file the returns separately, not combinedly. Maybe they are living together combinedly, but returns should be filed separately. So income taxes depends upon individual earning capacity.
What about non-resident Indians?
Suppose every non-resident Indian who is basically from India and is situated, is gone abroad for business or employment or any other sources, he may be having some income in India, maybe properties, maybe deposits, he may be earning income on India. So on that he may get some rent or some deposits, interest on deposits, or anything, he may get some income. On that income he has to pay tax, and depending only on Indian income only, he has to pay tax. Suppose a person earns an income of 4 lakhs in India as a rent, so he has to pay tax on that 4 lakhs. After exemption of 2.5 lakhs, he has to pay tax on that. Suppose he earns some interest income of 6 lakhs. On that 6 lakhs, he has to pay after 2.5 lakhs. So what his income earned abroad will not be clubbed with his Indian income, and it will be separate. Yes. There are some, of course, there are some conditions, but Indian income is taxable in India, foreign income is taxable out of the country. All this will not be taxed double. Because of double tax and avoidance agreement, every country will protect its own revenue, and every country will collect its tax on the income earned on its soil.
Sir, what is the meaning of HUF? How it is relevant for income tax?
HUF means Hindu, full form is Hindu Undivided Family.
Okay.
India is consisting of Hindus. Hindu Undivided Family means parents, children is called family, and elder parents also.
Yes.
So father, mother, son, daughter-in-law, and their children is called Hindu Undivided Family.
Okay.
So when ancestrals is there, when there is a marriage between two people, men and women, it is called, then starts family.
Yes, sir.
That is HUF.
Okay.
Then on the occasion of marriage only it starts HUF, and including their children, it is called Hindu Undivided Family.
Okay.
And this will be Undivided Family consists of husband, wife, children, and also if he is having parents also.
Yes, sir.
Father's HUF consists of himself, his wife, son, daughter-in-law, and their children, and other sons also.
Yes, sir.
All these are called Hindu-oriented family.
Okay.
So for all these HUF income, maybe ancestral property, maybe amounts received on marriage gifts, or maybe some other property they may be given on the occasion of marriage, that becomes a set of Hindu-oriented family. Means it belongs to husband and wife and children.
Okay.
So that is treated separately. It is not individually. It will be separated, and they are having exemption, eligible for exemption up to 2.5 lakhs.
Okay.
So this is specifically given for Indians only and Hindus under Income Tax Act.
What are the incomes to be included in income calculation? Are there separate income tax returns for different incomes?
Generally, people will feel that suppose a person is receiving pension, the tax will be deducted, and if he gets the interest and deposit, he feels that tax will be deducted, and whatever the income he earns, the tax will be deducted. He feels that when it is taxed, I have already paid the tax on that pension. I have already paid the tax and income interest, so I need not club together. That means tax has already been paid.
Yes.
But it is not like that. You have to club all the incomes together, salary, interest, and any other income, and from there you calculate the tax. After that, and what is the tax deducted by these people, TDS, reduce that, and the balance you have to pay. So it is not separate, it should be combined. So combined income, combined tax credit, combined net tax payable, or any refund is there, they have to get the refund.
What are the income tax rates? Who has to pay it, sir?
See, every individual has to pay income tax, I told earlier. If the person earns more than 2.5 lakhs, he has to pay tax at the rate of 5% up to 3.5 lakhs. From 3.5 lakhs to 5 lakhs, 10%. Now it is only 5%. 2.5 lakhs to 5 lakhs is 5%. From 5 lakhs to 10 lakhs is 20%. About 20 lakhs is 30%. About 10 lakhs is 30%. So if any person earns income of 25 lakhs, first 2.5 lakhs exemption, you have to make first deduction like that. First 2.5 lakhs exemption, the balance to 2.5 lakhs is at 5%, means 5 lakhs has gone.
Yes, sir.
Another 5 lakhs is 20%, so 10 lakhs has gone, and about 10 lakhs is 30% taxable.
Yes.
So this is the rates of taxes that has to be paid by the individual earning income.
Sir, what are the due dates to file income tax returns?
Generally, income tax returns has to be filed before 31st July.
Okay.
Many returns has to be filed before 31st July, but the persons who are carrying on business having turnover about 2 crores and professionals who is having professional receipts more than 50 lakhs per annum, their date is extended up to 30th September because they have to get their accounts audited under audited tax audit, that is called tax audit, and for that reason they have given time up to 30th September. So the persons who are having turnover more than 2 crores and professional receipts above 50 lakhs, they can file returns up to 30th September, and all others has to file before 31st July. And company's case also, if the companies, everybody has to file this 31st July except tax audit cases.
Okay. How many types of tax payments? How it is adjusted?
I told you, tax payment will be generally feel that while filing we are pay the tax. There are three, 4 ways in the tax collection. One has to TDS, that is called tax dedicated source. The bank who pays interest, they'll make 10% deduction from the interest. That is called TDS. The person who pays the rent, they has to make TDS, and that is a TDS. And the person who pays salary, they also make TDS. So all this is called TDS, one type of tax. And the TCS. TCS means the purchaser will collect the tax from the seller. Suppose a person is purchasing a property of about 50 lakhs.
Yes.
He has to, from the seller, he has to collect 1% tax. Suppose if a person is selling for 50 lakhs, he has to collect 50,000 towards income tax and he has to pay on behalf of him, on behalf of the seller. And he has to give only 49 lakhs 50,000 to the seller.
Okay.
The same way, excess purchase is there. BDUs purchase, excess purchase, forest purchase, all has to collect 1% from the purchaser and pay to the income tax department. That is called TCS.
Okay.
And another type is advance tax. 2 types of another is advance tax. Every person has to pay his income tax liability is more than 10,000 per annum. He has to pay in 4 installments. 1st June, 15th, second is September 15th, third is December 15th, fourth is March 15th. So in 4 installments he has to pay entire his tax liability. If it is balance, while filing the return, if the balance left out, he has to pay the self-assessment tax while filing the return of income. So these are 4 types of tax payment one individual has to pay for his income.
Can the tax deducted by employees, bank, any other will exempt the taxpayer for income tax return filing?
Generally, people will feel that, I told you earlier, any person whose tax has been collected by the through TDS, they feel that my tax is already paid to the department, so I need not file my returns of income.
Okay.
So, but this is a wrong conception. Every person has to file his return. What the director has done, his duty, not your duty. So, every person who is having income from salary, interest, rents, anything is more than totally together 2.5 lakhs, he has to file his own return of income. He cannot say that he has already tax has been collected by the director, I will not pay it. His compliance is to file to TDS, to make TDS and file TDS returns. And one has to file his compliance by filing his return of income, clubbing all the incomes put together and claiming the deduction what is collected by the banks and what will call TDS payers.